our audience today. I'm glad that we have such a great turnout. My name is Jasmine. I'm your moderator for tonight's episode of Ask Me Anything webinar series. Today, we are going to find out more on how certain is your retirement in this uncertain time. Not long ago, many Singaporeans were indifferent to inflation. Today, inflation has become a much talked about concern. Benjamin Franklin once said, in this world, nothing is certain except death and taxes. So in this current high inflation rate environment, are we really ready to retire? I am sure everyone has some burning question. May I request that you type your question in the Q&A button, and the panelists will get to it during our Q&A segment. And for the audience, we are live on Facebook and Zoom. Before I introduce our guest today, I must assure all of you that there will be no selling tonight during today's webinar. It will be completely educational. So let's keep this session lighthearted, sit back, relax, and enjoy your time while the speaker shares some of their thoughts and views on retirement. So if you're watching us, please share it with your friends and family whom you think would benefit from this fireside chat, where you can ask all your questions about retirement live to our very own financial specialists. I'm so thrilled to introduce three of our financial specialists. Let's hear from them. How certain is your retirement in this uncertain time? So for tonight's speaker, we have Choo, firstly. Secondly, we have Simon Chan. And thirdly, we have Elijah Lee. Firstly, we'd like to introduce Choo. Our next slide, please. She's our very own financial services director. She's a chartered accountant and has been with Phillip for about 20 years. Currently, she's managing a team of 16 advisors. Maybe Choo, can you please unmute yourself and say hi to our audience?
Good evening, everyone. My name is Choo. You can call me ABC in short. Thanks, Jasmine, for the introduction. Like Jasmine said, I've been in the industry for 20 years, since 2003. I've witnessed multiple financial crises, including SARS, Lehman Brothers, and the recent pandemic, COVID pandemic. Throughout this time, I've observed individuals who were able to weather the financial storm successfully due to their wise planning and emerge stronger, and others who suffer significant losses. Therefore, I strongly advise everyone to commence early planning to ensure a hassle-free retirement. Over to you, Jasmine.
Thank you, ABC, for such a wonderful introduction. Choo really braved through these many years and came out victoriously from all these financial crises. And speaking about many years, coming up next, we have Simon, another experienced individual, 17 years with Phillip. Simon is a dual license representative, which means he holds both trading and advisory license. This is unique as Phillip is the only company that has dual license representative. I'll stop here and let Simon share a little bit more about himself. Simon,
hi, thank you, Jasmine. Yeah, good evening, everyone. Thank you for taking the time to attend this session. I can understand planning for retirement can be quite a challenge for some of us here. So I hope at the end of this session, all of us can get some tips on how to get it started and simply just take a step closer to securing retirement. Back to you, Jess.
Thank you for sharing, Simon. I believe that after this webinar, right, we will definitely benefit and learn more about retirement. Our next speaker, Elijah. Next slide, please. Yeah, he's our own financial services manager. Some of you might have heard his voice on Money 89.3 FM and read his interview on Channel News Asia and The Straits Times. Elijah also conducts a webinar frequently on various financial topics. Tell us more about yourself, Elijah.
Hi, good evening, everyone. Thank you, Jasmine, for introducing me. I'm Elijah, and I'm the Financial Services Manager with Phillip Securities. So I've been working in Phillip for the past 7 years. So as Jasmine mentioned, some of you may have read my answers on personal finance questions on the CELI platform. You may have heard me on radio on Money 89.3 FM, or maybe even read my interviews in Straits Times. So I'm based in the Westgate Investor Center, and I often meet my clients there. So I feel very strongly about the topic of retirement since we all have to retire one day. So I hope that everyone whom I work with will be able to lead the the kind of retirement lifestyle that they desire. Thank you.
Awesome introduction, Elijah. Thank you for introducing yourself. All right, that's the introduction for our guest today. I'm thinking to start off this session with a poll to know more about our audience tonight. So I'll read out the poll question. So, what is your ideal retirement age? If you are on Facebook, you can comment in the chat box on your answer. If you are on Zoom, just click on your answer. We shall wait about 1 to 2 minutes for the result to come in. So I'll give the answer. Number 1 is below 50. Number 2, 50 to 55, 56 to 60, 61 to 65, and above 65. You can see the poll popping up right now. Please key in your answer. All right, do we have the result already? All right, okay, as you can see, our audience here thinks really wants to retire. Oh, they think that they want to retire at about age 61 to 65. And many of you also wants to retire around 50 to 55. No, thank you everyone for participating. After knowing how what our audience thinks, let's hear from our speaker again. Let's start off with the first question for tonight. Okay, our first question for our speaker: what kind of retirement do you envision yourself? Do you envision for yourself? Is it possible to retire early? Choo, would you like to start off this question first?
Sure. My envision for retirement where I have financial security and the freedom to pursue my desired lifestyle, which include travel, hobbies, and time with families and friends. Being in the industry allow me to have access to many financial products, which allow me to build my retirement nest egg early. I can retire anytime if I want, but I would like to continue working for now because I love my job. Yeah, over to you, Jasmine.
Okay, maybe we have the next speaker. Maybe Simon, you want to take this?
Yeah, sure. I have to be honest, actually, I've not given too much thoughts of it. I think I'm old, but not that old. So, but I think the question to ask is, because retirement for many people is about life without working. At least that's the common definition of retirement. So this is actually, if you think about it, a very big change of lifestyle, because as an adult, work occupies so much of our time. So the key question you ask is, what do you want to do with all this time now? Now, if you think about it, it's not easy to answer this question. It definitely takes some reflection. So for me, I would say I would want to reach the stage during retirement as to be able to do as one please. It sounds very general, but I think as of now, this is what I want to strive for. Is it possible to retire early? The only way to retire early is simply to plan early. I think that's how I see it.
We agree. How about Elijah? What do you think?
Okay, I see my retirement as one where I would personally have sufficient income to meet my expenses. So to the point where I don't have to think too hard, right, about my expenditure. So for example, I wanted to try food at a fancy restaurant, I can just do that. Or if I suddenly just decided I want to go and take a short trip overseas, I can just go ahead, and book the flight and the hotel. So on top of that, I don't want to stress about, the source and the stability of that income. So my income should actually come to me worry-free. So peace of mind is really important in retirement. So I do see myself retiring a bit earlier, perhaps actually in my mid-50s, so kind of like in line with quite some of the audience poll response, right? So I'm not yet 40, but soon 40, so that's another maybe 15 years away. So since retirement is actually very important to me, I've already taken steps to prepare for it. So I've started to create my income streams and, ensure that I'll have sufficient cash flow, when I retire. So when that is met, actually, I do envision myself just, maybe working lesser hours while having time to pursue my passions. So I honestly don't really think I'll ever fully retire, since I really do enjoy working with my clients, but at least I'll have the option to slow my pace down once my major liabilities like the house have been taken care of. Yeah, so that's what I think.
Oh, well, I think, our speakers, right, especially Elijah, definitely painted a beautiful picture of how retirement, will be like for him. But of course, I believe everyone here is interested to know how to achieve that kind of retirement that, you envision for yourself. We'll get into it very, very soon. Let me just show the audience a very interesting article first. Maybe the next slide, please. Okay, so this article conducted by Straits Times, as you can see, it mentioned that an elderly Singaporean needs about 1,379 per month to meet their basic living standard. What do you think, Simon? Do you think that 1,379 is really sufficient to retire in Singapore?
This is not an easy question to answer because it's very subjective to each and every one. But let me touch on a bit on this survey. Now, this is actually a very extensive, in fact, first of its kind survey that was done in 2019 by the LKY School of Public Policy as well as NTU. This is based just to address the main question. How much money do older people need to achieve a basic standard of living in Singapore? I think the keyword is basic. I recall that back at that time, I was curious enough to look at the report itself, which I think is about 70 pages long. So the study get the participants to agree on the list of items that constitute basic standard of living, and then to ask them to put their budget to each item. So that's how they come up with the figures of 1,379 a month. To me, the main takeaway is for the first time, there is actually a monthly figure that indicates, hey, this is the amount that if you have it on a monthly basis, it provides a basic living standard. So I think this is a good reference point for anyone when they start to talk about retirement planning, because it's always good to have a fixed figure to base on.
Thank you, Simon, for what insightful sharing. Now that we have a figure, right, I'm also curious what our audience thinks. We can move on to our second poll to really get to, hear from our audience as well. Poll number 2, do you think that 1,379 is sufficient for you, for your own basic retirement living standard? Number 1, yes. Number 2, no. Number 3, not sure. You are on Facebook, you can comment in the chat box on your answer. And if you're on Zoom, just click on your answer. We will just take a few minutes for the final result. Right, is the result in? Okay, wow, we can see that a lot of you actually disagree. You don't think that is sufficient for basic standard living. Okay, very interesting. Most of you feel that it's not enough. Thank you for participating once again. Our next question, right, it directly links to a little bit of what we are asking also. In this current high inflation rate environment, what is considered enough to retire? Maybe for this question, let's hear from Elijah on his view.
Sure. I would say this is a very, very interesting environment that we're in. I feel that this is a short-term period of inflation where the Feds, they are countering this inflation by raising the short-term interest rates. But we know that although the short-term interest rates have gone up sharply, if you look at the long-term interest rates, right, those are still actually quite low. So you may be spending a bit more during this period, I think, but in the long run, inflation itself should slow down again. So I would say this brings about the concept of a buffer and a reserve. So example, if you think you're spending 3,000 a month in retirement after accounting for inflation, don't plan for 3,000. Don't. Plan for a bit more, say 3,005. So what's the worst that could happen, right? If inflation sets in and is far worse than expected, you have the buffer to absorb it. And your reserves can be tapped as well in case you still don't have enough. So if inflation doesn't go crazy, I think that's a good thing. You end up with more to spend, which is actually a good problem to have, right? So when you want to have enough to retire, you also need to, you have to have that buffer and reserves as well. So no one can truly say what is enough, since retirement really varies from person to person. But once you have an idea of what is enough for you, just add a little extra on top of the calculation so that you can have that peace of mind. Yeah. So maybe Bichu, you have an opinion to add on?
Yes, I agree, Elijah. You should have created buffer to account for any unforeseen circumstances. Being an accountant, we always call ourselves a kiasu. And in this kiasu way, we have a kiasu concept called prudent concept, which emphasizes the provision for all possible losses without anticipating profits. I think we should apply this concept when planning for retirement to ensure a realistic outcome. It is common for people to underestimate the amount of money required for retirement, especially not factoring the inflation. So for instance, like what Elijah said, let's say you think 3,000 a month may be sufficient. But if you add an inflation of 5% a year, the required amount will become 5,000 in 10 years' time. And then there is about 60,000 per year and 1.2 million for 20 years. Therefore, in this high inflation rate environment, it is essential to plan a higher sum to cater for your retirement needs. It is better to budget for more than less, so that you have rooms to breathe if things do not go according to plan. What do you think, Simon?
Yes, I think I want to highlight is that before everyone forget, right, when the inflation rate start to spike, right, as recent as 2021 March, our CPI, which is the inflation rate for Singapore, is only at 1.3%. It's not even 2%, and it has been like that for quite a number of years. So as what Elijah has mentioned, is a very interesting environment, right? Retirement planning can be a decades-long endeavor, at least for the younger ones. So I want to share is that when we advisors do planning for our clients, right, we take the long-term inflation rate into our calculations, so that we take all these fluctuations of ups and downs over the years, into the plan, so that the plan is robust enough to give a more accurate or a more realistic outcome. As for whether is it enough to retire, I think the poll strongly indicates that the 1,379 is not enough. But in the study, the participants show that that's probably enough for them, or for at least for the participants. So it's quite subjective. Ultimately, you need to talk. You need to talk to your advisors to come up with a plan that is enough for you.
Hey, thank you all the panelists for sharing. I'm definitely taking notes. My key takeaway for the sharing is actually to plan for more than what I need. Of course, more is better than less, right? Okay, so since we are on the topic of inflation, I'm curious, maybe we can have our next slide. I'm curious about which is more important, having inflation adjusted retirement income or lifetime income? Maybe Bichu can start.
Okay. For me, I would think that both inflation-adjusted retirement income and lifetime income are important for a comfortable retirement. What is inflation-adjusted retirement income? It actually protects your purchasing power against rising cost of living. As you know, prices tend to go up over time. And you don't want to be caught in a situation where your retirement income can't keep up with your increasing expenses. This is why it is crucial to factor in inflation when planning your retirement income, so that you can maintain your standard of living even as prices rise. Lifetime income ensures that you don't outlive your savings. You want to be able to rely on a steady stream of income for the rest of your life, even if you live longer than expected. This is why it is important to plan for sources of income that will last as long as you do, such as an annuity plan. Annuity plan is a plan which provides income for as long as you live. An example of an annuity plan is CPF Life. I think most people would be very familiar with. What about you, Feynman? What do you think?
I agree both are important. So the way I see it is it's almost like asking the question, what comes next, right? The chicken or the egg? I don't think there's really a good answer. But to me, if one is able to ask this question, it is more important because it shows that one understands these two important aspects, which is longevity risk and purchasing power of your retirement income. Because these two is a very big factor when it comes to retirement planning. It has a very major impact, in fact. If you really want me to answer, right, then I think I would say it's better to have lifetime income, which means you have income better than no income, right? Because at least at that point in time, if it's not inflation adjusted, we can do some adjustment on our own. But if you have no income, then it's basically no income. There's nothing to adjust. So that's how I see it. Elijah?
Okay, I strongly believe that you should have the right framework and structure for your retirement in terms of the strategy. So as mentioned by Bichu, inflation-adjusted retirement income ensures that you can keep pace with rising expenses since the payouts will increase over time. Lifetime income ensures that you won't ever run out of income for your expenses since you get a payout as long as you live. So we can see actually, to me, if you ask me, both are essential things that you must consider for your retirement. But the key here will be to determine how much are resources to allocate to each type of income. So you ask me, actually, there isn't really a fixed answer for this. I believe you should work through the numbers with an advisor so that you would know, what best suits your situation. Yeah.
Now, after hearing from our speakers, once again, thank you for sharing. We just want to touch on the concerns that our audience might have. We would like to start on the next poll, which is our last poll for tonight. Okay, what kind of concern do you have when planning for your retirement? Number one, is it rising healthcare costs? Or is it living too long with insufficient savings? Or number three, difficulty maintaining income stream? Or number four, having too much debt? If you are on Facebook, same thing, you comment on the chat box on your answer. And if you are on Zoom, you can just click on your answer right now. We will wait for a while before the result come in. I'm actually very excited to know our audience concern. Okay, so is the result in already? Oh, all right. So over here, you can see that most of our audience are concerned about rising healthcare costs. Okay, so it's quite far apart, the second and the third one. And actually, most of them are not very concerned about having too much debt. So I think the healthcare cost is definitely one of the main concern. Okay, we would like to actually ask our speaker the next question to link for this poll. Okay, so what are the common retirement concerns your client will have, and how will you address them? Since our panelists are always on the ground working with their clients to reach their retirement goal, let's hear from their experience. Elijah, can you share more with us about these common retirement concerns that you face while working with your clients, and how do you address them?
Okay, sure. So one of the biggest risks that people often fail to consider is something we call sequence of events risk. So this risk actually occurs when one expects to draw down on, say, an investment portfolio to fund your retirement expenses. So if the markets are not doing well like now, okay, the impact of a drawdown on your portfolio will actually shorten the lifespan of your investment portfolio by a lot, because you will be forced to actually liquidate your portfolio at a loss. Right. So it's important to realize that actually you cannot just rely on investments to fund your retirement. You also need like secure income streams that are not affected by market movements. So for example, CPF life or annuities. Yeah.
How about Simon? What are your thoughts on this topic?
For me, I think the most common retirement concerns as I hear from my clients is simply how to plan, how to start, right? Because there are many factors to consider, and usually the goal is quite far away. Right? Maybe I mean, perhaps for most of us, it's more than 10 years, or even for those who are younger, even 20 over years. And so I mean, human nature, right? Things that are far away, we are not so concerned. So we are always concerned with the immediate problems, like, getting a HDB flat nowadays, right? That's the biggest concern for most people. So, but what this means is it ultimately is, it end up many does not take action, right? The most common word is procrastination. And that is the reason why most retirement planning fail, because no action is taken. So how to address it, right? I think the only way is commit, right? Start now, right? In fact, start small as $100 a month. Because by only committing, that is where you have the motivation to monitor it, persevere, and then to continue rather than to stop halfway.
Okay, Choo, maybe I will want you to share more about, like, since our audience are very very concerned about healthcare costs. Maybe you would like to share a little bit more about, like, the healthcare costs, like how can we deal with this concern? Yeah. Okay,
sure, Jasmine. Okay, all these concerns that was brought up, I believe they are all valid concerns. However, most important thing is you have to have to cover all areas to have a comprehensive retirement planning. So, for example, if as a major illnesses strike and this person does not has a health insurance, the retirement nest egg will be affected, and eventually will not be able to retire as comfortably as he wants. You know the recent increase in Shield plans, premium increase in Shield plan, plus the recent changes in Shield plan where certain drugs no longer cover. All this will affect your planning or retirement planning if you don't have a proper health insurance. So when you are doing your retirement planning, remember that you have to consider all these areas as well, be it a health insurance, be it a critical illness plan, or maybe monitoring your investments so that you are assured that you are on track to your retirement needs. Yeah, that's all.
Okay, thank you, Choo, and thank you all our panelists for addressing the different concerns that our audience might have. After hearing about all the concerns, I'm really thinking about, like, when and how we can start our retirement planning. Can we have the next question, please? Okay, so what can I do to start planning for my retirement? When is it too late? Any takers for this question?
I think let me comment on this, which is a repeat of what I mentioned just now. Commit and start. Don't have to be a very big amount, something small. As I mentioned, $100 a month, I think is quite affordable for most of us. Don't worry that the amount is too small, all right? Because once you start, you are actually tapping on the power of compounding, right? Because power of compounding takes time, and time is the one that really gives the boost. So even if it's small, but over time, it can grow to a very big amount. Right? Another tip perhaps is you try to make it effortless or invisible. Right? Like you can put into a monthly investment plan. I'm sure everyone have heard of unit trust. $100 a month, just get deducted from your bank account. So it's invisible, right? You don't even feel the pinch. It's gone every month. But after some time, when you look back, you say, hey, I have already set aside some amount and I'm already on my way to plan for my retirement. So that is actually the most important of all. How about Elijah?
Okay, so I would say it's actually never too late to plan for retirement. I've worked with people from ages of 20 plus to 60 plus for their retirement. So although most of my clients are generally in their late 30s to 50s, having said that, right, I've also worked with people who are months away from retirement. So even then we could still actually optimize their portfolio to improve the quality of their retirement. Of course, there's a limit to how much can be achieved if there isn't enough time. So, I would say if you've not done anything yet about your retirement, maybe tomorrow might be a good time to start looking at it. What about you, Bichu?
Yeah, I agree with you, Elijah. Okay, so I think for a start, do something simple. Just set a retirement goal and then calculate how much you need as expenses. Then you use that as a guide to work out how much is your retirement needs. Then you start to save for it. So it's never too early or too late to start planning for retirement. The earlier you start planning, the more time you have to save and invest. But even if you're very close to your retirement age, take steps to plan can help ensure a more comfortable and secure retirement. Over to you, Jasmine.
Well, so I guess the solution, right, is to start small and start now, or you can start big and start now also. Okay, so we have already touched on the, like how and when is it too late and when should we start planning? Can we touch on the how? The next question, please. How should I allocate my resources when creating my retirement plan, retirement income stream? Anyone would like to start this?
Maybe let me take this one. I would say it starts with a strong understanding of your current resources, right? And as well as how much more you can commit towards building your retirement income streams over time. So if you have plenty of resources and very low expenses, actually, I don't think you need to take undue risk with your retirement. It may actually just be good enough to have CPF Life and supplement it with safe payouts from, say, annuity or retirement income plan. But reality is, however, for most people, they will have to allocate quite a fair bit of resources to what I term as risk-based income, such as stocks, REITs, so on and so forth, in order to achieve sufficient income in retirement. So I would say that one should ensure that at least your necessities in your necessary spending, right, will be met with sufficient guaranteed income. So non-guaranteed income can be used for paying for things such as your holidays or fine dining during your retirement. So for most people, I worry that often seems to be about, say, a 2/3, 1/3 split with more resources. In other words, 2/3 of it being allocated to generating guaranteed income. Yeah. Bichu?
Oh, hi. Oh, okay. I agree. We should have allocations like there's no specific method to allocate. Rather, you should have you should know the principle in allocation. I personally feel that diversification is always the key. Don't put all the egg in one basket. If you want to invest, okay, just invest. But you also need to consider some safe instrument. Okay, even the return is low, at least it give you a certain certainty of income. So if you don't know how to plan, then I would suggest you consult a financial advisor to have a peace of mind, and then you have confidence in your planning. Yeah, over to you, Simon.
Yeah, I think both Elijah and Bichu has given a broad idea of how to allocate resources. Right? The way I see it, I think in fact there are too many ways to allocate resources, right, for most people to handle. And that's one reason why perhaps some are fearful to take action, right? Fear of missing out the best investment product out there, if there's such thing as the best investment product, right, in the first place. In fact, I dare say any competent financial advisor can come up with a decent plan on how to allocate resources. If not, you can just ask Google or maybe nowadays ChatGPT, right? But for me, when I engage with my clients, right, whether we have any plan set out in the first place, I will always want to ask them, does this plan resonate with you? Does it compel you to take action and to stick with it? Because I can come up with a very fanciful plan, which perhaps I'm quite sure you can reach your retirement goal, but does it make you want to take action, right? Believe in the plan? But if it does, which I think you should ask, everyone here should ask yourself when you come across with a plan in future, if it makes you compelled to take action and stick with it, then I think you are already halfway to securing retirement.
Awesome sharing. Thank you once again for all your generous sharing. So I believe, right now we have a clear idea on how we should allocate our resources to create a comfortable retirement. Like before we move on to our Q&A section, we would like to welcome you to connect with PhillipCapital or with any of our financial specialists tonight. All of them have something in common. They are all active on social media and are always very generous in sharing and broadcasting value-added financial tips to their clients and followers. At the same time, they are also expanding their team and welcome like-minded individuals to explore more with them. You can scan on their QR code to connect with them. We will show this page later on again. And for those who are enjoying webinars like this one, we will also like to invite you to stay connected with us to receive more updates and give us a like on our Facebook page. It's facebook.com/Phillip Wealth Advisory. Okay, so now let's get on with our Q&A segment. Give me a moment while I pull up the question. Okay, so wow, we have a lot of questions over here. Okay, maybe we would like to answer. Thank you, Philip Lee, for your question. So the question would be, I would like the speakers to touch on the various way of getting the sources of income for the retirement. Maybe Elijah, you want to start off this question?
Okay, sure. So, hello, Philip. Firstly, thanks for your question. So, very broadly, the sources of income in retirement, I would say there are actually 6 of them. Okay, so first one will be rental income from property. Second one will be coupons from a bond portfolio. Third one, you can consider interest from a fixed deposit as a form of income as well. Fourth one, dividends from shares, REITs, things like that, or even payouts from, say, unit trust that pay dividends. Fifth one, pension from Social Security. So for example, in Singapore, we have CPF Life. And then lastly, you can consider a payouts from, say, endowment policy like annuities. So I would generally classify this 6 types of income. It's just important to note that, of course, they are not all the same type of income. In general, I would say there are 2 types of income. 6 sources, 2 types. The first type would be your paycheck, meaning income that is safe. That's why I term it as a paycheck, secure guaranteed income, like your paycheck every month. And then there's something like a play check, so income that you use for play, but it's not really, I would say, not very secure. Example would be like dividends from shares. So in COVID, we know that a lot of companies didn't pay dividends, right? Or like the banks, they cut dividends. So that kind of income is a little bit more risky, lah. Yeah. So safe income and not so safe income. Yeah. So I hope that gives you a good idea. Yeah.
Okay, before I move on to the next audience, right? Actually, Philip has a few more questions. Okay, I think you touched on the one about dividend. So he mentioned what kind of recommendation would you like to recommend for investment into dividend yeah. So Elijah, have you touched on this topic? If not,
maybe let me just add on to this. So
just
Philip,
add on,
you asked me about dividend investing. I would say that, of course, you've got to look for very, very solid companies to invest in. So for example, now this is not a recommendation, but in the case of Singapore, for example, the banks are considered relatively solid dividend paying companies. So things like that. So if you are looking for stability or income stream, really, I would say try and stick with more stable companies, bigger REITs, things like that. And of course, don't bank everything on dividend investing. As we've seen in COVID, dividends can get cut. And if you're overly reliant on this kind of income streams for your retirement, you could be in a bit of a pinch if the payouts are not what you expect. So have a good mix. Yeah.
Okay, so for Philip, he also mentioned that if you are in retirement right now, what's your thought? Like, just to continue from
Okay, so if you're in retirement now, I personally feel that look at where your income sources are, what your income sources are, and then you might want to optimize, because I've met people who are like either very close to retirement or actually some of them even retired already. So they were still holding on to what I term as some dead weight stocks. They were holding on to penny stocks, things like that, things that don't do any good for their portfolio. So what you can do, for example, if you have like penny stocks that aren't doing any much for your portfolio, you should actually just restructure, take the loss on that, but maybe redeploy your resources to something else that will be more suited for your retirement. Yeah.
Thank you, Elijah. Okay, so we'll move on to our next participant, which is Desmond Lau. I think maybe Bichu, you would like to take this question on this CPF Life monthly. Will CPF Life monthly payout be sufficient for basic daily expenses in our retirement in 20 years' time, accounting for inflation?
Okay, so whether it is enough or not really depend on individual. Okay, if you just depend on CPF Life, if you are already in, let's say you are already over 55 and you have already locked in the amount for CPF Life, then you will know roughly how much is your income. Say, for example, it's about 1,200 to 1,300 a month. Is that enough? It will be around what was the base to meet the basic living standard according to that article earlier on. However, most people today, they want a better retirement life. I think, and like what the poll say, is not sufficient. Most people would think it's insufficient. Therefore, if you want a comfortable retirement life, I think you need to explore other options as well. CPF Life is good because it gives you a certainty of income, but you will need to have other sources of income so that to supplement whatever the CPF Life cannot or insufficient in the areas. For example, you may want to go for holidays, you want to have buy gift for your grandchildren and kind of things. So yeah, like what I say, you may want to have more others, explore other sources of income on top of the CPF Life.
Thank you, Bichu, for sharing. I hope that answers your question, Desmond. Okay, so we have another question. Oh, sorry. Okay, over here. Maybe Simon, you want to take this question. The market is so volatile right now. From Amanda Co, by the way. Okay, it's so volatile right now with banks collapsing and no idea whether Fed would still be rising interest again soon. In light of this, how should one invest or navigate if they have an existing portfolio?
Okay. Well, how to answer this? Let me see. The way I approach things can be quite general for a start. I try to focus on things that we can control. Okay. So the external economic environment is definitely not stable, right, given the banks are having issues now. But this is something that we cannot control, right? So we have to understand it, that's for sure. It has impact on any investment portfolio, but we can't control. So what we can control is, as what Amanda is saying, what should we do for existing portfolio? Certainly it's due for a review, that's for sure, right? But it should not be when things turn bad and then that's where you focus on your existing portfolio, because all this should have been anticipated when the portfolio is constructed. So it's when these times comes in and then you should be able to know how to react. So if let's say your profile is very conservative, right? Even if the external economic environment is very bad, because you have a conservative risk profile, your portfolio should be able to retain some of this impact, and you should not be able to create a very negative effect on your portfolio. But of course, on the flip side, if someone is very aggressive, right, as a high risk taker, certainly when there's external environment turns bad, right, your portfolio will get hit. So I would say preparation is key, right? When you set up the portfolio, it should be according to your risk profile, so that when things change, you already know how to react, and the portfolio should already have done its work before things happen. Hope you answer your question, Amanda.
Yes, thank you so much, Simon. Okay, I will try to choose something that is, hold on now, give me a moment. Okay, talk about annuity. Are there, okay, hold on. Okay, are there a pure annuity plan in the market? Believe most plans in Singapore which are marketed as annuities are actually whole life plan. Yeah, this is a question by Ko Huang. Maybe Elijah, you'd like to take this?
Okay, sure. Firstly, thanks for your question, Ko Huang. Okay, let me just talk a little bit about this concept of whole life plan. So, we often see whole life plans as basically something that covers you for life. Now, in the traditional sense, whole life plans will cover death, TPD, things like that for the rest of your life. But in the case of annuity, they cover you for life in the sense that as long as you live, they will pay you an income. So that's why you asked me, are there pure annuity plans in the market? I would say yes. Okay, they're all from private insurers. They will pay you for life, and their focus is not on death cover. It's just purely to give you a payout as long as you live. So in the sense that their whole life is because they pay you for the whole of your life, and that's why you can, in a way, consider them whole life plans, but for the purposes of paying you income. So I hope that kind of clarifies it. In fact, CPF Life itself is a whole of life plan in the sense that it pay you as long as you live as well, except that, of course, you know, the payout, the death benefit so-called left behind, the longer you live, the lesser there is left behind for your family. But private annuities generally will leave your capital largely there for your family when you're no longer around. So yeah, in short, yes, annuity plans are in a way considered whole life, but for the purposes of payout. Yeah.
Awesome. I hope that is good. Is a good answer, definitely. Okay. So there's another question by Alex Wu. Income fund is one of my planned sources of income when retire. I realize many of them take part of the capital to pay for regular dividend, which ended up with a reduction of capital, hence reducing the dividend. What should be the important criteria to choose the income fund in this case? Maybe Choo, would you like to take this question?
Sure, Jasmine. Okay, thank you, Alex, for the question. Okay, you are right. There are a lot of income funds in the market, and then some of them actually pay out from the capital, especially in this environment when, you know, there are many companies are not doing well, they are not paying good dividends, and the fund can't pay you dividends from the dividend they receive. So they have no choice but to pay off capital. So you will, in this market, you will see a lot of funds being depleted due to the reduction in the capital. But if you can hold on, because eventually when market recover, your funds should be performing, or should be back, or maybe the value should increase later on. Don't liquidate them now because you are going to realize the loss. And then if you have a well diversified portfolio, don't worry about it, because it over time the market should be better. And then if you go to like look over the fund performance, maybe over a 10-20 years period, you will realize that the ups and downs should be level up by itself. So hold on to the investment and then choose the fund. Okay, you're asking about the most important criteria for the income fund. When you look at income fund, I think you have to be careful, because there are some dividend fund that has got junk bond inside. All those funds may not be able to perform or maybe, you know, down the drain when market is really bad. So be careful of those funds. And then don't just look at the dividend payout. You have to look at the track record of this fund, and then how is the performance over a longer period of time to decide whether this is a good fund for you. I hope that answers your question, Alex.
Thank you, Pichu. We will answer two more questions that's more like slightly different. Okay, about CPF as well. Over here, should I consider buying T-bills or saving bonds from CPF OA before turning 55 to get better long-term interest rate than the 2.5% right now? This is a question by May. Any takers for this?
I think
Simon, do you want to go?
let me just comment. Thanks, May, for the question. Certainly, this has been quite popular when the T-bill and the saving bonds rate shot up, right, for the past 1 year or so. So that's where news article have been reporting that everyone has been queuing up to put their money into T-bills and savings bond. From the layman point of view, actually, it's quite straightforward. As long as it's above 2.5%, right, then why not, right? Because Singapore issue bonds and bills are AAA. In fact, it's one of the safest product deemed in the world, and it's giving rates that are decent. So I would say it's almost a no-brainer. Right, for as in whether is it before turning 55, if let's say you are already close to age 55, which is the withdrawal age, right? I think it's quite suitable, because it's a short-term instrument and it's definitely very safe. If you hold it all the way, you can get back your principal. So that is a good decision to make. Yeah.
Okay, thank you, Simon. Okay, we have the last question for tonight. Okay, it is by Sumitira. Sorry if I pronounce your name wrongly. Okay, is critical illness plan a whole life plan? As a single, is it still important to have critical illness plan, or should I convert it to a retirement income plan? Anyone would like to take this question?
Okay, maybe I'll
Can
take
take
this.
it.
Oh,
So
okay.
Sumitira,
We
thanks for
will
your
hear from
question.
both of you. Yeah.
Okay,
Let's
why
go.
not?
Let's go.
Okay, Sumitira, CI plan, right, may or may not be a whole life plan, because you need to know exactly what you bought. There are CI plans that cover you for whole life. Usually that's a whole life plan itself. There are also CI plans that cover you for a period of time. So this will be like a term CI plan. So hope that clarifies the first bit. And then as a single, you ask, is it important to have CI plan? Yes. Okay. Especially if you're still working, CI plan, what it does is basically it protects your future income. If something were to happen to you, you become critically ill, you're not able to work for a few years, where's the money going to come from while you you recover, you spend time recovering. So that's the purpose of a CI plan. Okay, so at the very minimum, I would think a CI plan is still important, especially for a working single. So don't be in a rush to convert it into a retirement income plan. They are actually really for separate purposes. One to protect your income, and one to give you income when you retire. So that's my take. Bichu?
Okay, Bichu, maybe you add on.
Okay, maybe I'll just add in a little bit. Okay, for this CI plan, be it a term or whole life, it's still important as for single, because you really need to have some coverage in case you are unable to work. Okay, last time people used to say, if I really got cancer, I want to take a break. But when you take a break, who is going to pay for your bills? Who is going to pay for the house, the car, whatever? So you need a plan to cover your expenses, your living expenses. Okay, these are living expenses that you cannot omit even if you have a critical illness. And if you can't work, there has to be some ways to cover the cost. So a critical illness plan is good for you, and you should not be too quick to convert into a retirement income plan. If you are still young, you can take times to build your retirement income, and then at the meantime keep your critical illness plan. Yeah, that's all.
Yes,
maybe let me
thank
just
you.
wrap
Yeah.
up
Oh,
a
sorry.
bit about what Bichu say. I just felt like I
no
wanted to
problem.
say this. As a single, right, no one is going to look after you. You have to look after yourself. So you really
Oh,
need to make sure
yes.
you got a very good CI plan to protect your future income, and a very good retirement plan, or rather not say a plan, but a strategy to ensure that you've got income in retirement as well. Yeah. So yeah, as a single, got to make sure you're well taken care of. Yeah.
Thank you for your advice. We just want to thank all our panelists as well as our audiences. We are unable to answer all the questions, but of course, you can feel free to connect with our financial specialists again to really ask them the questions if you like to. Okay, so before we end off this awesome session, we would like to get our panelists to actually share their final tips with the audiences. Okay, so maybe we start off with Simon.
For me, keep it simple. Just take action. Right? $100 a month. Start tomorrow. Why not? Elijah?
For me, I would just say this: don't stress over retirement. We all have to retire one day. So I think what's more important, as Simon says, is to take action to work towards it. So as you progress in life, you just make refinements and adjustments for your retirement strategy so that you stay on track. That's better than not doing anything at all until retirement is staring at you in the face. Yeah. Bichu?
Okay, for me, it's also very simple. Jasmine just now say, thanking the person say only death and taxes are certain. In fact, retirement is certain too, unless you die of premature death. So one day it will come. Then no matter how you procrastinate, when the day comes, you want to be prepared. So don't hesitate anymore. Start planning your retirement today.
Yeah,
Thank
speaking
you.
of starting and taking action, once again, I would like all of you to connect with our speakers for tonight, the next speech. Okay, so you can, take out your phone, scan the QR code, connect with them so that, if there's any other questions you might have, burning questions, you can just, email them, you can just talk to them and connect with them. Okay, so we have come to the end of tonight's session. I would like to thank our three fabulous speakers for their unreserved and open sharing, and a big thank you to all the audience for staying through, and do join us for our upcoming Ask Me Anything episodes. This is Jasmine signing off. See you everyone and good night.